Hello and welcome to Livewire's Buy, Hold, Sell. I'm Selby and today we'll be drawing on the expertise of two of the GOATs of Australian investment management. They'll be helping us cut through all the market noise we're hearing today by providing some of the lessons they've learnt from more than 2 decades in investment management. And they'll also be naming some of the leadership teams they're really liking today. To do that, we're joined by the wonderful Allfrey from WaveStone Capital, as well as Anthony Aboud from Perpetual Asset Management. Like all good stories, we're going to be starting at the very beginning today. Kath, I want to know, what was the stock that really put you on the map at the start of your career?
Well, I had to look after, as a young analyst, the sort of telco media space, and similar to today, when you sort of went through this speculative period, and there was a lot of pressure at that time to invest in these speculative startups. It was Afterpay more recently, but if you go back 20 years ago, it was the company like OneTel. And I travelled around the world and I looked at the company and I came back and I said, working at Colonial First State at the time, I didn't think that we should invest in it. And the only actual small telco that we invested in at that time was Macquarie Telecom, which is still alive today and kicking. So I think over a period of time, you just, generally learn, what makes a company tick. And in that case, it really did put me on the map and gave me the opportunity eventually to become a portfolio manager.
Okay, over to you, Anthony. What was your greatest call early on?
I was an analyst at what's UBS now. It used to be called SBC Warburg. And I was covering the gaming sector. One of the companies I covered was Aristocrat. And in about 2002, 2003, it was going through a really tough time. Stock had fallen about 85% down to 90 cents. And it was on the back of bad acquisition. They were going through growing pains, turnover of CEO, and they had some uncollectible debts in South America. And so it really, things had got pretty bad. I had a negative call on it then, and then it turned. And you got professional management in then at that point in time. Paul O'Neill and Simon Kelly became CEO and CFO of the company. And what didn't change the whole time was this is a good industry to be in. There was only 4 players in the world. They had good games. They were one of the top 4. There are barriers of entry, and they just needed to get some professional management in, which kept the entrepreneurship of the business, but actually managed to add more professionalism. And they turned it around. And whilst I didn't pick the bottom at 90 cents, I wasn't too far off that. And the stock was $7 maybe 18 months later.
You've worked in the industry for 25 years. What was the biggest mistake from that time? When was it and what did you learn from that?
Look, plenty of mistakes. Probably, so too many to count. But probably the biggest one was McGrath Holdings. I read the prospectus before meeting the management. And after reading the prospectus, I thought, there's no way I'm going to invest in this. I'm just not even interested. Anyway, I went into a meeting with John McGrath, who was the founder of the business, and walked out bidding for stock and buying, exchanging on an apartment. No, I didn't exchange on the apartment, but we bid for the stock. It was $2.10. It's never seen $2.10 since. We've obviously sold out long ago, but it's now currently trading at 39 cents. Ouch. What I learned from that, a few things. First of all, be wary when you've got good salespeople selling you stuff. You just got to walk out of the room, respect the fact that someone's a good salesperson, and just make sure you just take a cold shower and have a really good think about things. Secondly is whilst we love founder-led businesses, not all of them work. And finally, understand with business models, some business models, they might be sustainable businesses, but where do the economics end? Think about stockbroking, real estate agents, or even I'd say, radio or TV media today. The economics is going to end with the talent. It's going to end with the talent rather than the actual in between. And so that's something which I've learned, is understanding whilst an industry might be profitable, where are the economics in it?
Kath, you've got 4 years on Anthony. What was the biggest mistake you've made during that time? When was it and what did you learn from it?
Well, I made plenty of mistakes like all investors do, and like you say, you really do have to learn your lessons. So for me, I'd go back to September 11. Australia was the first stock market to open. We were under a lot of pressure. Macquarie was doing a placement at the time at $35. Now, we took that placement at $35 and watched the stock fall to $22 over the ensuing period. Now, what did I learn through that time? never take a capital raising from a investment banker without doing a lot of due diligence, and particularly Macquarie are very good at timing the cycle. So when they're raising equity, take a deep breath before you jump back in would be my two big lessons from that time. But yes, it was a painful trade.
Markets have obviously changed a lot over your career. What's the biggest change for you, and have you adapted your strategy because of that?
I've been giving some deep thought to this because there's a number of changes. Obviously, interest rates have collapsed, and so that's the big one through my time in the last 25 years plus. The other big change is the rise of the unlisted market and private equity and their ability to take small companies and grow them. And so companies are tending to come to the stock exchange later in their life cycle, and when they do, unfortunately, they're perfectly priced. So another lesson out there is when an IPO comes in now, and in the old days it used to be there was always a stag of about 10% that would occur, whereas now you get this fully priced IPO with usually one or two bombs in it. They're going to blow up in the next 1 to 2 years. So I actually are quite highly sceptical of any private equity listing coming to market.
Okay, that's a good lesson for investors. Over to you, Anthony. What's the biggest change you've seen in your career in markets?
Yep, I'd say the biggest change I've seen is definitely the shift to passive, and we've seen this really accelerate in the last sort of 5 years. What this is, we're seeing especially in pension funds and who are more motivated to get market returns rather than much more above or below, and so not as interested in that sort of high tracking error, and really want to get just the lowest fees and getting the and just getting market, and that results in a lot of strategies just buying what's already gone up and selling what's already gone down, which doesn't sound like the smartest thing, but it seems to work in momentum style markets. Has it adjusted? Have we adjusted the way we do things? Not really. It's maybe a bit more nuanced, that we respect momentum a little bit more. So that might mean dragging your feet a little bit on selling something which has gone up, and respecting to make sure not going too early and too big a size when we're looking to buy a position. So it hasn't changed, but it's nuanced exactly how we sort of get in and out of a position.
You talked before to really over-promotional leadership.
Yes.
What makes an awesome leadership today? Can you point to an awesome founder-led company, a founder-led leader, and an awesome agency CEO that you really respect today?
Yeah. Even though he's not CEO, he's an executive chairman. On the founder-led, we think Solomon Lew at Premier does a fantastic job. It's a founder-led company. It's got Smiggle, Peter Alexander, and what we feel that he's bred within the company are at least two, maybe three individuals who could be CEOs of ASX-listed companies, and we think it's a business which has kept its entrepreneurship, but has also allowed people within the company to grow, and we feel that over time they will be CEOs of individual companies over time within the Premier network. So yeah, we always find these founder-led companies like Premier go into a downturn with a lot of cash, and they'll deploy that cash and lean into the market when things are getting tough, whereas a lot of other people are sort of getting away. On the other on agency style business, well, you'd have to say Matthew Corman from CBA has done a fantastic job. He got into the job at quite a tough time. This is right in the back of the Royal Commission into the financial planning industry, and he got into it when they were all out of favour. Everyone was sort of throwing rotten tomatoes at all these banks. He's done a good job of balancing shareholders and all other stakeholders at the same time, and that's not easy. It's easier said than done. He's balanced the political side, the employee side, and as well as doing a good job for shareholders. It's rare that you get an industry where you get very, very similar businesses, but one business has sort of four or five turns PE higher than the other three. And I'm not putting it all down to the CEO currently, but it's a good indication of what the market thinks about him.
Okay, over to you, Kath. What's an agency CEO and a founder CEO that you're really liking right now?
Okay, so from an agency point of view, I would say Rob Scott from Wesfarmers. I think the Wesfarmers way, in terms of particularly focusing on entrepreneurship at the divisional level, also very strong capital allocation. Over a long period of time, that business has been particularly successful. But what Rob has recently done is he's invested in healthcare and spent about $1 billion of capital in the healthcare part. Plus he's stepped out into lithium as well with the Mount Holland mine. And so those two businesses really are two growth industries, healthcare and lithium, over the next 5 to 10 years in Australia. And so if you have a very solid, amazing business in Bunnings and Kmart, and then you combine it with these sort of niche opportunities, Rob's setting Wesfarmers up for a really good growth trajectory over the next 10 years. Just on the founder side, you know, equally amazing is Greg Goodman. He started that business in a similar, you know, time frame to us in going into markets 28 years ago, and he's taken it from one shed in South Sydney all the way through now to, you know, 81 properties globally, and managing, you know, extensive partnerships agreements. So what is exciting about Goodman's is coming out of results was their data centre opportunities. So not only will they be in industrial sheds globally or logistics, they will also be in data centres. And what was fantastic was on the result call, you should listen to it, he was equally as enthusiastic as he would have been 5, 10, 20 years ago about the opportunity and growth ahead for Goodman.
Goodman is truly an Australian success story. Well, I hope you enjoyed that episode of Buy, Hold, Sell as much as I did. If you did, why not give it a like? Remember to subscribe to our YouTube channel. We're adding so much great content just like this every single week.